and welcome to Closing Trades. Right here in 80 now with me, Aisha Faridi, Nikunj Dalme in the studios, and we'll of course have our chartists as well join in just a short while from now. What a show of resilience for our equity markets. I mean, to think of it, all of global markets are down and out, but I think that graph pretty much is a telltale sign of the kind of resilient strength that you are seeing in the markets. Today, of course, it's all the magic from an HCL Technologies, which was the best of the lot so far within the IT pack. That, of course, has gapped up and managed to build on to its gains. So another 2.5% bump up coming in for HCL Technologies. There's Tata Consumer, there's Nestle from within the consumer pack. They're looking good. Innocent Bank is holding up very smartly, about a 2.5% gain over there. But the star performer really is Tata Motors. And I think we should just bring up the intraday graph for Tata Motors, because that in itself will spell it out for you as to how the move has been on Tata Motors. Absolutely quiet for the first half of today's trading session, and then the spurt up, now climbing on to the high point of the day, almost nudging that 665 level for Tata Motors. There's the HDFC, AMC, Metropolis. These are some of the other names which are also looking good. And by the way, the market breadth has already broken into the green, at least within the liquid F&O universe. We're standing at a better count for the advances versus the declines. But let's see, it's only going to get better, hopefully, from here. But let's welcome on board our chartists as well and find out what's leading to this resilience. Kunal, hi, afternoon. Surprised by the resilience today?
Well, yeah, sort of surprised, but I think positively surprised, because, what we've done is we've managed to fill a major gap which was created on the index today. And that gap could probably have led into a major correction for the indices, at least maybe a retest of the previous swing lows. That's a 400-point drop on the index we could probably have expected on the Nifty, and maybe an 800-point on the Bank Nifty. But I think that could now be averted for the indices, looking at the way the indices have recovered. Again, phenomenal move across many larger cap names. The market breadth is looking quite charged up. Nifty is back again above that 50-day moving average, and even the Bank Nifty I think is now coming close to that 44,500 breakout. So I think it's a phenomenal recovery, and if we just sustain for maybe another couple of days and don't break today's low, which has been created on both the indices, we could be looking at 20,000 plus possibility for the index very, very soon.
And that's the beauty of India markets, right, Nikunj? That, it's still a volatile situation when it comes to the yield. Definitely, since the geopolitical tensions in the Middle East have escalated, you have seen a bit of a cool-off coming in. But at a time when you don't have support from the FIIs, globally as well, things are looking wobbly. You've got India where all the buying is coming in, supported by DIIs.
Sasha, it's not been it's been a good week, but it's not a week where the world has gone down, you've gone up. You pretty much have done in line with what other markets have done. So it's been a surprisingly strong, resilient environment for equities in general at a global level. Now you can throw in a lot of permutation combinations here. Okay, geopolitical crisis means that central banks will not increase rates. Geopolitical crisis always meant spike in crude, but that has not worked out in totality this year. Israel is important. Geopolitical ripple is here to stay, but it is unlikely. It is not a Russia or a Ukraine kind of a situation where it was a war between two countries and two natural resource provider and one large, which will have bearing both on the oil market and also on the commodity market. So those factors are not at play. So we are used to looking at a market always reacting and acting in a magnified manner in the short term whenever there has been a geopolitical crisis, but this time markets are exhibiting maturity and they're just looking through it and they're understanding the real impact rather than analyzing rather than any kind of an overreaction. Meanwhile, I think you got to go back to IT today. It's not banks or Tata Motors for me, it's IT which is surprisingly resilient, and especially TCS. The IT index has bounced from the day's low. Infosys, which has given two profit warnings for 2 quarters on the trot now, has not really come under the sell hammer, so to speak. I mean, with that kind of a performance, 2.5% cut is something you could say that the Infosys has fallen less. The growth actually is just zero virtually for FY24, and yet the stock has not gone through the floor, so to speak. TCS is up in the green. HCL Tech has managed to bounce back. So markets are clearly telling you that short-term pain, maybe long-term comeback for IT per se. Ashi, Anand joins us. Let's take a conversation forward. Let's understand that why IT stocks have not fallen. Ashi, good to have you back. Whether it's TCS or whether it's Infosys or HCL Tech, the numbers so far are not looking impressive at all. IT companies are talking about business going down first before it recovers. But the stocks today have not fallen apart. With this kind of a commentary in a normal environment, these stocks could have gone on the butcher block.
Nikuj, hi. Thanks a lot for having me. So, if you're looking at the IT numbers, it's really not all that bad. There is clear kind of pressure in terms of guidance for the current year. So you've seen HCL Tech, you've seen Infosys cut guidance for FY24. But on the other side, you've actually seen very strong deal wins and very strong deal wins across the board, be it TCS, Infosys, HCL Tech. I think this has been a very strong quarter in terms of deal wins. Now, what this does is it lays the foundation for a potential strong bounce back in FY25. Some of these deal wins are longer tenured in nature, so they will take time to ramp up. You're not seeing the revenue impact of this in the current year, primarily because of that reason. But as we start going into FY25, one, you get some amount of tailwind of these large deal wins that you are seeing companies across the board kind of win. Plus, you also hopefully have some kind of economic normalization as we go into next year. So probably at some extent, the strength that you're seeing in IT is the fact that the current pay-in for this year is something which is known. But the potential bounce back going into next year is partly now starting to get discounted. The other core element when it comes to IT is you are seeing kind of companies be able to hold on and in fact improve margins across the board. Attrition, which was a concern a few quarters back, is also clearly kind of coming down. So I don't think it's all bad for IT. Yeah, there is some amount of short-term pain, but you are seeing some kind of decent hopes from the longer term, and I think that's why the stocks really aren't falling.
Naresh, hi, afternoon. What is your sense on what's happening with IT? Because there's a clear, distinct behavior with how the street has absorbed HCL Technologies as opposed to TCS and Infi on the other hand.
So, in terms of price action, we've noticed even going into the results, the two resilient stock in the large caps were TCS and HCL Tech. Infosys was the one which was struggling in the move, and every time it has seen a gap down over the previous 2 quarters as well on the numbers. So the last 2 quarters, it saw a gap down, then a recovery, and by the time the next result comes in, it is at the same price. The last results also, we were at 1350, 1400 band. We came back very close to those levels. So it's very clear the leadership is in TCS and HCL Tech. HCL Tech is the more interesting one because that's actually seen a positive reaction and retested that 1200 band and recovered. So out here, HCL Tech is the best play out here. Next one is TCS on dips. So I would expect 3450 to hold on for TCS, 1150, 1200 to hold on for HCL Tech, and they both remain buy on dips.
Hear out how the earnings season and more importantly the commentary from the managements for the three IT majors who've announced their Q2 numbers has panned out. That's HCL Technologies, Infosys and TCS.
It doesn't look like Q3 will be a very strong Q3, right? Unlikely, but we'll wait and see on how Q4 turns out. If we have enough people and enough bench, can we execute some of those projects ahead of time? These are all the thoughts that goes in our mind, right? To ensure that we have a decent Q3 and then worry about Q4. We see a strong pipeline, a lot of qualified pipelines consisting of deals of all shapes and sizes.
We see the impact in telecom, in high tech, in areas of financial services that we'd shared in the past.
Last year we hired about 50,000 odd freshers, and in a way we hired ahead of sort of a demand predicted which we had. Now with that slowing down over this year, our utilization, as you saw, actually had fallen into the 70s, and therefore now slowly quarter on quarter you are seeing an improvement. So we still have a significant fresher bench. With us, we actually of course training them on new skills like Gen AI, SAP, etc. But we still have, a way on utilization to go. So at the moment, we are not going to the campuses as yet.
The next 2 quarters, we expect a very healthy sequential organic growth in our services business. However, the market is still a little tepid on the discretionary spend. At the start of the year, we expected the discretionary spend would start coming back, partially at least. But with the continuing macros, the spending has not come back the way we expected. This quarter, as I announced, the telecom, media and entertainment segment has grown sequentially 6.2%, which is a very, very strong growth.
Okay, inflation has peaked out. Well, when inflation peaks out, what do? You go back to consumer staples. and especially when inflation is peaking out largely because of vegetable prices coming down. So look at Tata Consumer, Nestle. I think Citi had a report on Nestle. You've got Tata Consumer 911. In the same vein, if I talk about Nestle, Nestle has gone up. Britannia has gone up. So consumer vegetable inflation, oil inflation comes down. When I say oil inflation, vegetable oil inflation, consumer staples will always go higher. But the problem remains the strain. The three horsemen in the market, which is Kotak, HDFC Bank and Reliance, they are just not going anywhere. So whatever we may talk about, Naresh, in terms of markets going higher, the three horsemen, which have a combined weightage between them of about 30%, they are not going anywhere.
So at least they've stopped falling and they've gone sideways for the last few sessions, mild recoveries. So if we look at a Kotak Mahindra Bank, the stock has recovered from roughly 1700, 1720 to 1760 mark. HDFC Bank similarly has recovered from that 1500, 1520 to 1540 odd levels. So those are minor 1 to 2% pullback. Same is the case with Reliance Industries 2300 to 2350. So the first thing we've started seeing is they're not falling off or slowly drifting lower. Rather, the drift has been upwards. If any one of them actually starts making a comeback, that is where things could change. So overall, but if you look at the same time, other names, the smaller weights maybe in the index are doing pretty okay. Even in the banking name, you have an Axis Bank which is 2% away from an all-time high. You have an IndusInd Bank just say 10 points away from an all-time high, from a 52-week high. So overall, the structure is pretty positive on the overall sense. Even if you look at the small cap index, the BSE small cap or the Nifty small cap index is 1.5%, 2% away from the all-time highs. So out here, the case is we need at least one of these three heavyweights or a sector to start taking a lead. As of now, we are yet to see in the heavyweights, but we are seeing it in the smaller weights in the index.
Okay, let's get in some more news. And Indigo's former promoter, that's Rakesh Ganwal, is at the advanced stage of talks to buy a sizable stake in cash crunch SpiceJet. ET now, in fact, has learned from sources that the Ganwal family is in talks with SpiceJet promoters and the deal may actually be happening soon. Sameer Dixit is here with more details. Sameer, what are you picking up from your sources?
The big and important development taking place in the aviation sector, but we are picking up from our sources that Rakesh Ganwal, former promoter of Indigo Airline, is in active talks with SpiceJet for a stake purchase. Sources have indicated that the Ganwal family is in advanced talks with SpiceJet for the stake purchase, and that is the reason that the SpiceJet stocks are buzzing on the street. Not just this, but we are also seeing that the SpiceJet airline is moving actively and is showing a healthy signs of recovery when it comes to the route expansion and the aircraft induction program. The SpiceJet airline has commenced the aircraft induction program, and they are going to induct 10 Boeing 737 aircraft. This started in the month of September, and so far 3 aircraft has already been inducted by the airline, which are with the SpiceJet fleet, and they are flying as well. Now, in addition to this, the airline has also leased a wide-body A340 aircraft. SpiceJet is also looking to induct the 10 aircraft which are currently grounded, and these 10 grounded aircraft will be joining the fleet very soon. Overall, SpiceJet recovery is on the very positive side because the festive season is there, the Cricket World Cup, even the school vacations and the long office breaks. These all factors are contributing for a good demand and increased bookings for SpiceJet. And that is the reason that SpiceJet is currently looking very positive when it comes to the stocks aspect as well as on its growth trajectory path.
Very, very interesting. Thank you, Sameer. Very, very interesting. The Ganwal family, Ganwal, I beg your pardon, is looking at buying a sizable chunk in SpiceJet. Now, is it logical if I have to connect two and two? Of course it is. The Ganwal family, they really understand the aviation business. They've, in a sense, been partners and they build a very formidable airline, world-class airline, built to last kind of a business. SpiceJet, on the other hand, well, they've gone through the ups and downs. The COVID, stoppage really hit them. It's a brand which is very strong. They've got right routes. They have participated very well in government's Uran scheme. It's just that they need cash infusion and maybe some amount of hand holding where somebody who's really mastered the art of running a successful airline in India can really come in with equity commitment and direction. So is it logical? Well, maybe. But the market right now is telling you yes, something is coming, because the stock in a jiffy, which is today's trading itself, has gone up by 16.5%. That's a sizable move. Indigo, on the other hand, it's the other way around, where the Gangal family is actually looking at selling their stake, and they've been selling their stake and reducing their stake in a subsequent quarter. Now that cash which they're getting, will that go back to SpiceJet? Well, that's what I think Samir is trying to allude to, and he's broken an exclusive source-based story on that, 16% higher for that. Ashi, so in your digital fund, have you added anything of late? Have you made any changes? Because a lot of new interesting digital-based companies have gone public. I'm looking at one company, Zaggle, RateGain. There are a lot of new companies which have gone public of late, which essentially are in the SaaS business.
So, Nikunj, without really getting into specific portfolio action that we may not have taken over the last month or so, yes, we are very clearly evaluating some of these companies. So SaaS, according to us, is a very interesting digital platform. You spend a lot of money building out digital technology, which is your software that you provide as a service. And subsequently, there's just tremendous operating leverage that can play out here. The one concern that we've really experienced when we've been evaluating some of these SaaS players, and that's really where we are in terms of our current research, is trying to just ensure the one thing we're very clear on our digital platform fund is we want to ensure a very clear right to win. Now, in some of these SaaS platforms, you are either addressing a market size which is not necessarily large enough, or the right to win has not yet been clearly established for a particular niche. So while we are evaluating these companies and we may be taking certain stakes in them, this is still not something we are necessarily making very large investments into.
Sanjiv Bhasin also joins us. Let's connect with him. And Bhasin साहब, hello जी, आप अहमदाबाद में हो, दिल्ली में हो?
हाँ, गुड आफ्टरनून। नहीं, मैं चंडीगढ़ था, अभी वापस दिल्ली में हूँ, गुड़गांव में हूँ।
तो मैच के लिए नहीं जा रहे हो?
हाँ?
मैच के लिए?
नहीं, मैच के लिए नहीं जा रहा, बिकॉज एक और एंगेजमेंट है और संडे से मेरे फास्ट भी है, नवरात्रा है, तो मैच टीवी पे ही देखेंगे। निकुंज जी, अहमदाबाद में होटल नहीं है, जगह नहीं है, सीट नहीं मिलने वाली। इट्स अ रॉकर and luckily weekend is ending on a sweet note. Everyone is caught by surprise at the pullback in the market, and that's telling you that we are a buy on every decline.
And if the decline does not come through, what should one do? Because these declines are very rare.
Then keep adding to your portfolio. Stay put. Don't keep watching XYZ, because if you keep staying put and be invested, then is the only way you will make money. तो अगले हफ्ते 15 तारीख के बाद सेकेंड हाफ में न्यू हाई आने वाला है, और जो अंडर परफॉर्मर है, रिलायंस, एचडीएफसी बैंक, दे विल कैच अप, बट दे आर इनफ लेग्स. मारुति, एलएनटी, टाइटन, आई थिंक मेटल्स आर नाउ पॉइज्ड टू डू वेरी वेल. ऑलरेडी आपने देखा है मोस्ट ऑफ द पीएसयू metal stocks, NMDC, GMDC, it's now the time of Tata Steel, Hindalco to join this rally, because the dollar is headed lower, and I think commodities will do very, very well in the coming quarters.
Why have markets not reacted to all the geopolitical tensions this week? I mean, what are markets betting on which everybody in a sense was confused about on Monday morning?
So Nikunj, the market is discounting now that the Fed is going to, in fact, by the end of the year, maybe cut rates, and the rally which you've seen in bond yields is more slowly going to ebb out, because more and more money in this sphere has gone into bonds, and that has got the yields lower. Secondly, if the dollar weakens, then the feel-good factor for emerging markets particularly will be very strong. Or India's demographic, we are just at the cusp of the festive season and beyond, and I think that consumption is going to be very strong, as is evident from air travel, hotels, and the likes. So the global rally seems to be that dollar has peaked out, and so have yields, and I think equities are in a sweet spot. Some results are due, particularly in the US. I think they could be the trendsetter for further upside. And when the markets stop falling on bad news, that is the time you have to wake up and understand that the trend is your friend if you can catch these falls and make money on the upside.
Okay, so help our viewers, Sanjiv, make money. Any stock ideas that you're working with? You were just alluding to the fact that, for the India-Pakistan match, na hotel hai, na flight booking hai. Maybe some ideas there.
Well, those stocks are already on fire. Indian Hotel, Indigo. But Aisha, I am very bullish on the metal space, particularly Tata Steel and Hindalco. You can't but get better names than this. In fact, I had a buy on Hindalco today morning when I gave my call and a sell on Emphasis. Emphasis was a weak stock. I am very bullish on Hindalco, Tata Steel, and I like Bajaj Auto in this correction. Bajaj Auto numbers will be the best we've seen in the two-wheeler space, and exports are doing extremely well. So the weak rupee is actually going to benefit Bajaj Auto a lot. And fourthly, I would say Gujarat Fluorochemical is up 30% in the last 4 days. We've been recommending that stock. I think fluorochemical prices may have bottomed out and can see a sharp upsurge. So SRF is one stock which I'm betting on hitting 2750 by the end of this year. And that is I would say an investment pick. SRF can be a huge dark horse on the back that numbers, fluorochemical, nylon cord tire, all the businesses which you have, SRF is, some part of them.
Tata Steel and Hindalco, two stocks which Sanjiv Bhasin is bullish on. But Mr. Bhasin, what about the good old China connection with steel stocks?
Well, Nikunj, it's going to come faster than you thought. There will be some relief package, and I think they are working on that. Who knows over the weekend? And actually, that will be the compounding factor. Plus, if the dollar weakens, then exports will pick up. By the way, I know that steel prices are going to be hiked by about 8 to 10%. And I think that the other metals will follow course. You've seen NMDC, GMDC all hit new highs. It's on the back that minerals are in a very sweet spot when such an event happens. And sooner rather than later, there will be shortage in one of these areas, which will see commodities do very, very well.
I'm going to get closing comments from Ashi Anand as well. Ashi, at what point in time some of the digital businesses which you have invested in, Zomato and Nykaa and Paytm, you would say that okay, I bought them, and when I bought them, nobody expected this kind of a 70% comeback in a Policy Bazaar or a Zomato or a 40-50% comeback in Paytm. So at what point in time you would say that look, these stocks are now looking richly priced, I need to take some chips off the table?
Yeah, so Nikunj, we are actually very confident on the space for the coming decade. Right. I think we were lucky in terms of our timing. We really got the bottom very well. And yes, there has been a very sharp bounce back from there. But if you just look at the underlying dynamics and look at the underlying value creation that's happening towards digital kind of platforms, growth is likely to sustain at very high levels over the coming decade. If you just look at kind of penetration in levels, India has 5 crore people ordering food online. They're over 50 crore in China. There are 18 crore online shoppers in India. They're over 70 crore in China. Now, a lot of internet penetration, access to cheap data, all of that has only emerged over the last 5 to 7 years. A UPI was only introduced as much as 2016. So I think we're still in very early stages of digital adoption. You're still in early stages in terms of the shift from traditional forms of commerce towards digital platforms. Something which is possibly not very well appreciated is how, as the next generation comes into the primary consumption class, this generation has actually been digitally native in terms of their form of consumption. People in our age group, we were used to traditional forms of commerce and have had to migrate towards digital platforms. The consumer of tomorrow has been born and brought up with digital platforms. So growth is going to be something which is kind of going to sustain at very high levels. We have been from day one, and this is in Feb when no one was kind of expecting it, we've been very strongly stating that profitability of these platforms over the longer term is actually much superior than what people are expecting. Now, if you just take a combination of high growth rates sustaining, profits kind of starting to kind of emerge and actually be at higher levels than what people are expecting, we expect to see digital platforms in India outperform overall markets over the coming decade in a very similar way to what you saw kind of the Nasdaq do over the overall markets in the US between 2010 to 2020. And therefore, our kind of call is don't try to kind of go in and out of the sector. We really see this as a very attractive buy and hold and a long-term compounding story.
Right. Okay, Ashi, great to have you on the show. Thanks as always for joining in. Sanjiv Bhasin, stay put. We're going to take a very quick break and come right back and continue our discussion with you.
In conversation with our experts, technical experts, and then you got Sanjiv Bhasin also telling us that, why is bullish on right now some of the metal stocks. The other talking point, Mr. Bhasin, today is that inflation has peaked out. Vegetable prices, fruit prices, oil prices, vegetable oil prices, all of them are down. And that has immediately sparked a rally in Tata Consumer, Britannia, HUL. Is there merit in catching on to that trade?
Well, definitely, I think consumers are going to be very, very, key in their all these producers, and these are huge market leaders. By the way, Nestle has hit a new high, and there is, the talk of the split and so on. And it's not on the back of just numbers. Nestle had committed about 6 months back that they're going to put in 5,000 crore capex. Now, such a big company, if it's seeing guidance and it's seeing the variability of money, then only they are going to put in more money. And I think the type of new products they have, particularly Nestle, Britannia, I think they are coming of age. And the consumer is ready to put that extra money, and this fall in commodities inherently will be an added advantage on the margins. Even if you see the numbers on import and export, I think they are very, very sweet. So I think the rupee should be a key beneficiary over a period of time. And like I told you, if the dollar is going to weaken, then commodities and this consumer plays are very, very strong. We have a buy as a disclosure on Nestle and Tata Consumer. We also added Marico. We think this weakness is an opportunity because that is one play which is going to be very, very key in the type of portfolio they have.
Sanjiv, much ahead of the festive season, much like some of the discretionary plays, autos, I guess, will also see a lot of buoyancy. Today, one can see a big spurt on Tata Motors, 4.5% higher. Where are your preferences within the entire PV space?
So Aisha, Maruti has been our top pick, and that has really outperformed. We think 12,000 is coming on Maruti by the end of the year, and all the people on the sideline will keep watching because they have an order book of 35 lakh vehicles against 17, 18, which was there in the previous year. The delivery is going to be the issue. Tata Motor, of course, is the biggest play and the benefit of EVs and the JLR. But I think two-wheelers are now going to rule the roost. So Ashok Leland in the passenger vehicle, a stroke commercial vehicle, and Bajaj Auto. These are two names which I'm very, very bullish.
Whereas the star really from a auto pack standpoint has been TVS. We don't talk about it. I never thought that TVS will do what it has done in last 2 or 3 years, but it just surprises us. Keeps on going higher, higher, higher. Before you realize it's picking out, it goes higher again. 1600. Where is the stock headed? It's exactly behaving like what say iShare behaved between 2010 and 2017-18.
So this has been a tough call. Every time the stock looks like topping out, it actually just pauses for a couple of weeks and again makes a new high. So actually got a stop out on a short trade here. In this case, the stock has gone through this phase of say 2-3 weeks of correction and then again a move up. So last time it moved up from 1400 to 1500, then took a pause. So I think from 1550, it could go towards 1650, 1700 and then take a pause. The stock has overrun in the short term, and even in the long term, the stock has done really well. Say from the lows of March, the stock is up 60%. From the lows of last year, roughly where in March of last year, it went all the way to 550, 600. The stock is now almost a 3x, 4x from those levels also. So tough to take a trade here, but one has to have a strict trading stop loss at 1500 because there could be at some point of time where there could be a decent correction in the stock.
Right, that's TVS Motors in trade for you right now. Kunal, let's take a look at Tata Motors. What's this sudden spurt like? Where is it going to lead to?
So it's already taken the stock to life high levels. I think 665 was the previous high for Tata Motors in the month of June or July. That's taken out today for the stock. Exceptional momentum back again. And this ends almost a 3-4 month consolidation for Tata Motors. And I think this is the classical chart pattern which you look out for. When a stock gets into a strong rally mode and then consolidates for 2-3 months, it gets ready for a breakout on the upside. And in the previous, many attempts for Tata Motors, in the previous many instances, the stock has not just managed to scale to a new level, but it's up the base or the support for itself by a margin of at least 10 to 15%. So even if you look out for 600, for example, as the previous support for Tata Motors, we could be looking at possibly this breakout level of 650 acting as a base for the stock. All we require is a follow-through price action for the stock, which I believe is a very strong possibility this time around. So traders who are looking for a buy should consider buying the stock at current levels and maybe adding on dips as well.
Okay, but since our closing comments, Tata Motors, Maruti, TVS or Hero MotoCorp, all of them have a different play.
Very difficult, Nikunj, they're all hitting new highs. But rather than Hero, I will go with Bajaj Auto. And now not Tata Motors, I would put my money on Ashok Leyland. I think they've garnered more market share. And yes, Tata Motors is the institutional favorite, but I would put my money on Ashok Leyland.
Ashok Leyland it is from Sanjiv Bhasin, and of course Maruti, where he sees a level of 12,000 by the year end. Sanjiv Bhasin, great to have you on the show as always. We'll see you again on Monday morning. But let me take some closing strategies too. Naresh, what's on your list?
So continue to like the same names, IndusInd Bank, which has given a breakout and is now in touching distance of a new 52-week high. The stock for the last few days was showing a lot of relative strength, and today we are seeing price action, so flag breakout done. This could surprise on the upside towards 1600 also.
Okay, that's the take coming in on some of the closing ideas from Naresh. Kunal, what's on your list?
So I'll go with Tata Motors as a closing trade. Again, classical breakout for the stock, a thrusting candle move, excellent volumes, at least the setup over the last 2 months for Tata Motors. Would look out for 684 to 685 as a BTST target for Tata Motors.
Okay, let's take a very quick break on that note. When we come back, we'll continue our market discussion and welcome on board Sunil Subramaniam. Back with closing trades right here at 89. The closing trades are not looking bad because the first time in the day today we finally managed to break into the green and just now lying quiet. 19,756 a print coming in for the Nifty. It's Tata Motors, HCL Technologies, IndusInd Bank, there's Nestle, Sun Pharma. Hero MotoCorp has had a very, very steady run for the past 3 days now, especially after that brokerage upgrade coming in on that stock. Maruti as well has been participating in the move today, and Bajaj Finance as well is back into the play. But let's step aside from equity markets and let's try and understand what's happening in the glitz and glamour world and, of course, their tie-up with businesses. And everyone from Alia Bhatt to Pariniti Chopra to cricket's Sourav Ganguly, celebrities are all increasingly, in fact, donning a hat of an investor as well. Sharad is here from our research desk. He's been doing some research and decoding what's driving these celebrities to the investment world. Sharad, tell us who's been making what investment and why?
Well, yes, it's a mixture of cricket as well as Bollywood when it comes to investments. But now let's look at why the celebs are donning the investor hat. Now, of course, there's a better brand visibility coming in, but these are strategic deals. That means equity is also being exchanged in terms of marketing. And of course, the social media engagement, that is something where the startups are actually looking to focus on. But now let's look at who is owning and having stake in these companies. Super bottoms, we are having Alia Bhatt. In Clenstar, Pariniti Chopra is there, and Dada Saurav is there in Just My Roots. He has invested. And also, if you look at other investors, Sanjay Dutt has invested in an Alcobev startup. And even Shilpa Shetty, she has gone into the D2C health food segment. And of course, she's also the brand ambassador of Mamaearth. If you look at Sunil Shetty, he has invested in a DOI healthcare company called Biohacker as well. And apart from this, Akshay Kumar and Katrina Kaif has also have made JVs with larger corporations to sell different types of products. And of course, Good Glam Group comes in when it's Akshay Kumar. Now, apart from this, which segments are actually the celebs buying? That is very interesting. And of course, the one which is public facing, that is something which you look at the consumption space. That is the D2D segment where we are having the beauty, personal care, as well as the food consumption. If you look at the mental health startup, that is where a lot of investments are coming in. And lastly, sports and medtech. That is where most of the investments are coming in when it comes to the celebs, as per the report by Traxon. Now, what are the top investments coming in for the big four over here? We have Sachin, Virat, Amitabh and Amir Khan. You look at the amount of investments, roughly 5 to 9 startups are there. And Sachin is having a notable investment in Spinny, while Amitabh Bachchan is having in the listed company PB Fintech as well.
Sunil Subramaniam joins us. Sunil Subramaniam, Sharad missed one name. Sunil Subramaniam's investments in.
Is he in Ahmedabad already?
How did you get?
Okay, so what do you want to start with? You didn't hear my question? I can
No, I
repeat
didn't
it.
get your.
No, Sharad was just sharing a list of investments by celebrities in which various startups. And he did not extend that list. He only stuck to Bollywood celebrities. Now I'm talking about market celebrities. So where are your investments apart from Sundaram mutual funds?
No, nothing apart from Sundaram Mutual. Everything is in Sundaram.
Come on. They say never put all eggs in one basket.
No, it's not one basket. No, we have diversified portfolio of 24 schemes here.
How are markets looking, Sunil? It's just been a week where markets have ignored all the bad news which came on the geopolitical front.
Yes, I think the reason for that is global capital liquidity, right, at about 28 trillion. It's still looking for best places to park money. And I think we are not directly connected with this particular conflict, right, except for maybe an impact on the price of oil, right? But that's something which will affect the entire world. So I think that when there is liquidity, right, these, what do they do with their money, right? You can't keep it in cash. So I think that's why it's trying to find its levels. In India, as usual, I think our growth rate has not been affected by any of the conflicts, right? If you see, except for the global financial crisis, after that, whether you saw it was COVID, whether it was the Ukraine-Russian war or this, our economy has been stable at that 6 to 7% GDP growth range because we are an insular, domestic-oriented economy. We are attempting to grow. Our exports only 2% of the world's exports. So we are very, very self-sustaining, insular. Yes, if you want to break out of the 6% growth mold, we have to become more international. That's probably not going to happen right now because of the situation the world is in. But at least you're assured of that 6%, right? Even when things go bad, somewhere domestically we are able to generate that GDP growth. And I think that that's a very, very big comfort zone to an FII. And I would say that domestically also, what's happened is that SIP book has now crossed 16,000 crores. So fund managers are getting money. So as you know, most mutual funds don't try to keep more than maybe 5 to 7% cash. And hence, any money that comes in got to buy. And when you see corrections happening because there is some panic reaction, there's always a buying support coming in because fund managers are getting money from investors. So I think ultimately the answer to your question, Nico, is that there is liquidity heading towards Indian market, whether from inside India or from outside India. That's the reason we are not overreacting to the bad news in your part.
But Kunal, the one name which is, I guess, in every mutual fund portfolio other than Infosys, of course, is HDFC Bank, right? What's the prospect for this one?
Yeah, difficult to say that from a near-term play whether the stock can see any kind of a recovery. We're just hoping that maybe some sort of trigger, hopefully post the results for the stock price could probably happen. But looking at the way the stock has been an underperformer, it's as if that not too many market participants are actually expecting any kind of a major breakout on the stock price, let alone a change of trend for the stock. Price-wise, I think 1500 odd levels for HDFC Bank is a very good support on a long-term basis. But purely in terms of trading, I'll definitely look to avoid the stock buying at current levels.
Okay, and avoid that. But you know what? HDFC Bank is also slated to come out with its earnings too, the first after the merger. So let's take it across to Harsh, find out what we can expect.
Right, HDFC Bank will kick off earnings for the banking pack Q2 FY24. It's going to be a unique one because HDFC Bank is now a merged entity, HDFC Limited plus HDFC Bank, both loan books combined, and therefore the numbers will appear combined, and the percentages therefore may not be comparable versus last year or last quarter. So let me start off first with that net interest income number expected around the 28,500 odd crore mark. That's where it's expected. Where operating profit is concerned, around 23,000 crores. So we're expecting quite an elevated OPEX this time around as well from HDFC Bank as they continue to invest in branches. Let's talk about provisions expected around 3,100 crore. Now, mind you, provisions last quarter were around that 2,850 odd crore mark. So you add up the HDFC Limited provisions and roughly you're arriving at a 3,200 crore number. That's where we are getting the number from. And profit after tax is around the 15,000 crore mark is the expectation. 14,800 is the number as per our poll. Of course, the most important piece of the numbers will be how net interest margins are evolving. NIMs are expected to retreat a fair bit. In fact, the overall NIM, which was at 4.1% in Q1, is expected to be around the 3.7% number. That's the guidance. Of course, need to wait and watch out how it actually plays out. The other piece or the monitorables will be with regard to how ROAs are going to move and how quickly can they move to that 2% number, and whether that loan growth of 6%, 5% odd sequentially is really sustainable. Of course, deposit growth also very solid from HDFC Bank. Whether those numbers are sustainable or not is going to be the key with regard to where management commentary is concerned.
All right, now here's one more story. ET now impact. Proud to say that SpiceJet has hit a 20% circuit. Why? Well, Indigo has learned that, or ET now has learned that Indigo's former employee or former, not employee, former founder in this case, Mr. Gangwal, they are looking at picking up a large chunky stake in SpiceJet. My colleague Samir has details.
The big and important development taking place in the aviation sector, but we are picking up from our sources that Rakesh Gangwal, former promoter of Indigo Airline, is in active talks with SpiceJet for a stake purchase. Sources have indicated that the Gangwal family is in advanced talks with SpiceJet for the stake purchase, and that is the reason that the SpiceJet stocks are buzzing on the street. Not just this, but we are also seeing that the SpiceJet airline is moving actively and is showing a healthy signs of recovery when it comes to the route expansion and the aircraft induction program. The SpiceJet airline has commenced the aircraft induction program, and they are going to induct 10 Boeing 737 aircraft. This started in the month of September, and so far 3 aircraft has already been inducted by the airline, which are with the SpiceJet fleet, and they are flying as well. Now, in addition to this, the airline has also leased a wide-body A340 aircraft. SpiceJet is also looking to induct the 10 aircraft which are currently grounded, and these 10 grounded aircraft will be joining the fleet very soon. Overall, SpiceJet recovery is on the very positive side, because the festive season is there, the Cricket World Cup, even the school vacations and the long office breaks. These all factors are contributing for a good demand and increased bookings for SpiceJet. And that is the reason that SpiceJet is currently looking very positive when it comes to the stocks aspect as well as on its growth trajectory path.
That's an ET now impact. Clearly, SpiceJet in a tizzy. That stock pretty much locked in upper circuit. It was at least a short while back, 43.48 on SpiceJet as we speak right now. But you know what? Let me quickly take it across to Sharad as well. It's been quite an eventful week with all the geopolitical tensions, the bond ease off, and yes, of course, the inflation trend back home too, as well as globally. But Sharad, what's the stock-specific chatter in dealing rooms?
Well, yes, in focus we are having PDS, and what we are hearing from the dealers is that the strong buying is coming from marquee investors when it comes to PDS, and the volumes have also been higher, and the stock has hit its all-time high levels. Now, looking at the stock chart also, the stock has jumped more than 80% from August lows itself, and it's trading at its lifetime high levels. Now, recently they did meet some FIs and DIs also last week as well, and the key investors who are already invested in the company include Inam Group as well as Vallabh Bansali on a personal basis and Mukul Agarwal as well. Also, there are 2 important triggers for the stock which might be actually re-rating the company, and this is what the analysts had to say. And they stated that there is an improvement coming in the client demand, especially for the holiday season from the Northern American part as well as the European part. And lastly, the important thing is that company has been recently getting large international orders as well, and tie-ups are also expected to be announced in the coming months.
Sunil, there is a lot of hullabaloo in defense and railways. How much of that is just hot air?
Well, I wouldn't use an extreme term such as hot air, but I think that, yes, I do feel that they've gone a bit ahead of their self in that sense. Because I think that it's a general aura of infra and that these things are going to get a huge order book and all of that. But I think the key thing is the market, I think, doesn't have clarity on which companies are actually going to back the order. So the market is buying up everything in that space, and I think that they are tending to get overvaluation space. Because ultimately, when the orders actually get executed, only a few of these companies will get it. So the rest of them are going to see a correction. Second part to it is that you're still trading on order book expectation. That will turn to order book conversion, but it's still not convert to EPS. So the point is that only when the order gets executed, the payments happen and reflect the earnings. So you're going to be an extended period of time where if you take from a price to earnings or even a price to book perspective, these are going to look richly valued. Yes, ultimately the company gets the order, will deliver, its profits will deliver, and will justify the price. But there has got to be a lot of shake-up in that segment. And I would say that, yes, I would rather stay away for incremental allocations into the defense and other related infra-related areas for the immediate present.
Sunil, I'd like to draw your attention to what's happening in the bond market. Last week, the bond market shot up, and today the bond market is not reacting to the inflation data. I mean, isn't it strange that inflation has come down and there's no reaction in the bond market whatsoever?
No, see, why should the market react to a short-term inflation management? You know, the what is the reason for the inflation coming down, right? It's the government which has got stocks in its FCI go down. It's an election month, and I think they're releasing the stocks. They're managing the inflation. It's not anything for a longer-term yield perspective, right? So I don't think the bond market needs to react to these inflation data. Number one. Second is bond markets, just like equity markets, are forward-looking. So the data which has already come, it's already history. It's already happened. But what is the way forward? Now we are seeing that for the Rabi crop, 50% of the reservoirs in the south are only full of water. So is there going to be enough sowing? Is inflation going to spike in Jan, Feb when those harvests come out? The bond market is also looking forward. So I don't think that a short-term drop in the inflation, because I think that what really happened was that there was a bit of a release of stocks into the market to keep prices under abeyance, given that this is an election season. That's it. So I am with the bond market that don't jump to these things and assume that yields are going to drop off. Just wait for the actual data for food inflation to come through. One. Two is we still have the oil hangover. The oil price, Israel-Hamas conflict, Iran being a player there. How is that going to play out with the summer, with the winter coming in, right? And already the OPEC had indicated a 3.5 million barrel shortfall. So oil prices trend over the next month and 2 months, right, is something which will have more impact on the bond yields than just domestic inflation number. So I think a lot of factors at play. So I am not surprised that the bonds haven't responded to the temporary inflation number that's come out.
Before we let you go, let's get in some at least sector ideas, if not stocks.
Sure. So I think that I was just talking to Nikunj about the infra play, which I feel has got a little stretch in valuation. So I think it's time for consumption to pick up. Because so far, whatever consumption has picked up has been premium consumption, right? Whether you have the premium housing, you have the cars over 7 lakhs. So I think that the mass consumption is yet to pick up. Come an election year with liquidity floating in the market, this festival season numbers it's a delayed festival season with Diwali coming only mid-November. These numbers will be reflected in the next quarter's earnings. So I see that those will show a healthy trend, and I think that consumption is due for a pickup. So my view is that consumption has room to go up. So that's my number one pick. The second pick continues to be the banking pack, because I think that while NIMs may not expand, the loan book growth will compensate for the fact that NIMs are not going to further expand too much. So price into quantity, loan book growth into the NIM will lead to higher profit reported from the thing. So banking and financial services I continue to remain strong on. So these two would be my two prime sectoral picks at this point in time.
Kunal, as a theme, what do you think is going to dominate next week? Because this week has surely been a volatile one. Weakness on Monday, massive recovery Tuesday, Wednesday, consolidation Thursday, and then rebound today.
I think except for pharma stocks and maybe select few auto names, there's hardly any major trend or follow through or a sector, kind of a trend which we can spot. So, for example, the PSU banking stocks have taken a pause. Private sector banks, again, very staggered kind of move. Only IndusInd Bank is one of the stronger names. Most of the other larger cap stocks like Axis, ICICI, HDFC Bank, to a larger extent, these stocks have been absolutely sideways. No major action, of course, in the IT stocks. We've seen them rallying last week, but I think this week maybe in the mid part of this week, many of these IT stocks have gone through a correction, so which means that these stocks would also remain range bound. Auto stocks, and specifically, I think Tata Motors, Maruti, Bajaj Auto to a larger extent. Nikunj was alluding towards Hero MotoCorp. That's also looking quite attractive as a chart. So maybe select few auto stocks and in a few of the FMCG names. That's where I would probably believe that there could be steady sort of momentum on the short term.
Well, while this week it was IT which dominated the earnings, flavor. Tomorrow, remember, Avenue Supermarts comes out with its earnings. Monday, Nikunj, we've got HDFC Bank. Tuesday, there's Bajaj Finance. There's Wipro, L&T Infotech, Bajaj Auto, IndusInd Bank, Nestle, Unilever, ITC, all coming out with the numbers on 19th. And then, of course, October 20th, you've got JSW Steel as well. There's also Geo Financial Services, by the way, which is slated to come out with its earnings on 16th. There's L&T Technologies, there's PVR, there's Paytm, all of them slated for their earnings next week. So yeah, next week onwards, we're going to be full bloom into earnings.
Yeah, so it'll be no speculation, only facts.
Yeah.
Markets will react to facts, no view in terms of global, ABC, technical, geopolitical crisis. It'll be ultimately all about numbers.
Yeah.
The quarter gone by, you can divide in two parts: the better part and the poor, and the better part and perhaps the laggard. The better part really would be banks. The laggard looks like IT is off to a bad start. The laggard really, to some extent, I will not be surprised, it would be rural plays. It really would be parts of autos where prices have been here and there, and some metal stocks. But in general, for construction, for defense, for railways, it's going to be a good quarter gone by. How much of that is in the news? Let's see how things really, stack up. But I'm hoping that what damage IT has done, banks would be able to nullify that and add more to it. As we wrap the week, it's been a week full of geopolitical news, but from a market standpoint, we just held it out. We held it out very smartly and beautifully. Middle of the week, we were greeted by inflation, which again was favorable. The bond market, in a sense, however, did not react to that inflation print. 1050 to the breadth, almost even, Steven. But you would grant it to the bulls that surely both locally and globally markets this week have managed to climb the wall of worry. And that, I think, is the most interesting fact, so to speak, for me, that markets indeed have managed to climb the wall of worry once again, despite very challenging global environment.
And we closed pretty much where we started off the week, where the print of near about 19,800 with names from IT, yes, as laggards, but brilliant moves today at least from even HCL Technologies. And what that really tells you is also the fact that the street is in the mood to reward good performance amidst a bleak and somber mood within that sector as well. Case in point clearly being HCL Tech. There's of course Tata Motors, which is in a big move today. I want to see what Interglobe Aviation as well as SpiceJet are closing in at, because that's of course a ET Now newsbreak, a 1% move coming in for Interglobe Aviation. The promoter, that's the Rakesh Gangwal family, we understand, is looking at a stake in SpiceJet. That stock closes up with a 19% gain. There's Bajaj Finance, Apollo Hospitals, Maruti, Sun Pharma. These are all names which have closed in with gains. Infi closes 3.5% lower. Naukri, Bandhan Bank, Emphasis, Syngene are some red dots in trade. So that's pretty much it for the week. We'll wind it up right here on this edition of Closing Trades.